We've come to the end of another trading week full of highs and lows, but what's on the agenda for next week? Here with me now is Valentin Marinov, Director of FX Strategy at Citi in London. Valentin, we've got a various mix of important data, mainly out of the Eurozone and the US. Out of these economic releases and news events, which ones in particular would you advise market participants to watch out for?
Certainly, the next week is going to be characterized by quite a few PMI releases out of the Eurozone, indeed the US. Actually, the ISM manufacturing and non-manufacturing releases are worth highlighting. And maybe what I suspect could be very interesting for market risk sentiment as a whole is the Chinese PMI data, which is also due next week. All in all, I suspect that while we have seen some really concerns about the Chinese recovery, the recent data was not really very supportive. I suspect that some indication that of more economic resilience could be supportive for market risk sentiment as a whole. In terms of the US ISM data, similar really logic applies. More evidence that the economic performance is or recovery is here to stay is likely to be supportive for market risk sentiment. As a result, risk-correlated currencies in particular should remain supported.
There's also a big focus on the European Central Bank's long-term refinancing operation, better known as LTRO. Next week, we'll bring the second round of the three-year loan programme after the December LTRO dished out €489 billion in cheap loans. What are your expectations for next week's LTRO? And just as importantly, what will it mean for the single currency and for risk appetite?
Yeah, next week's LTRO is expected to be similar in size to the first LTRO in December. Roughly 500 billion are being expected, and this is despite the fact that the ECB announced an extension of its collateral requirement so that actually banks will be able to use certain loans in their loan books as a collateral to receive those cheap ECB loans. Importantly, there were some headlines most recently indicating that large Eurozone banks need not actually raise as much cash as they did in December, which in turn led to some concerns that the overall amount may be even less than that. Overall, I suspect that in the case of euro-dollar, some positives are already in the price. We've seen the BTP, the bono markets rally in part on the expectation of a pretty significant LTRO take-up next week. From that point of view, I suspect any disappointment, that is, any number which is significantly short of the 500 billion estimate, suspect could deal a blow not only to the euro but also to market risk sentiment in general. Last but not least, certainly any I would say surprises on the upside could be supportive for both euro and risk sentiment.
Over the weekend, a G20 meeting will be held in Mexico, where of course the agenda will be dominated by Europe's sovereign debt crisis. What are you expecting to come of this weekend's meeting? And no doubt another topic of discussion will be the possible candidate to take over as leader of the World Bank after Robert Zoellick's departure.
Over the weekend, we do expect further indication that countries outside the Eurozone are reluctant to really take any further steps to extend the financing prowess of the IMF, and indeed to see greater involvement of the IMF into the Eurozone debt crisis before the Eurozone officials have taken steps to actually enhance their own bailout facilities. And importantly, it seems that the biggest creditor in the Eurozone, Germany, is still fairly reluctant to really move towards greater bailout facility. I suspect the grounds for compromise may be there in a sense that the German officials have already indicated that the two bailout facilities, the EFSF, the ESM, actually could coexist, really, effectively creating a larger firewall. Yet, that said, I suspect that the G20 meeting will not produce any, I would say, concrete steps towards really extending the lending abilities of the IMF, as those issues, especially the issues with the Eurozone firewall, remain unresolved. As regards the the helm of the succession of the helm of the World Bank, I suspect that the the unofficial agreement that a U.S. American actually will leading the World Bank, while at the same time a European is in charge of the IMF, could indeed prevail. Some more headlines on that, no doubt, will certainly highlight potentially the growing uncertainty about that, especially given that some BRIC countries are likely to propose their own candidates. Nevertheless, I suspect that the historic pattern is here to stay for now.
Thank you very much for that weekly outlook, Valentin. Now, for more market news, tune back in after the weekend, but for now, goodbye.